Good morning, everybody. It's Trent Klarenbach with Klarenbach Research. Today is September the 13th, 2024, and I found this great chart of RingCentral, and I feel that it demonstrates and displays some really key technical analysis concepts and principles. So this is the weekly RingCentral chart. I took off the candlesticks, made it into a line chart just to help with the visibility and the display. Now, if you've read my newsletters and watched my videos, you'll see a common reference to the 4 stages of the market structure. Now, we have 4 stages. There's a stage 1 accumulation, a stage 2 markup where we see rising prices, distribution is stage 3, and a stage 4 decline. Now, we'll see this chart pattern in every asset class, on every time frame. You'll see it on the General Electric 50-year chart. You'll see it on this RingCentral. What is this, like a 13-year chart, 12-year chart? You'll see it on a 1-minute chart of Apple. You'll see it on a 1-minute Bitcoin chart, any cryptocurrency. It's just amazing how this chart pattern repeats itself time and time again over every asset class. So take a look at this here. We see the stage 1 accumulation, and that's basically a consolidation sideways pattern as you know, energy builds up and buyers start accumulating the stock. And then once we break out to new highs, we have a stage 2 markup, and that's where you want to be long the stock or the asset. And eventually trends come to an end, they pull back, and there's a stage 3 distribution. And that stage 3 distribution can continue into a markup, or it can fall into a stage 4 decline. And a stage 4 decline, obviously you do not want to be long in a stage 4 decline. It's a place to go short and exit your positions or try to make money on the downside. So I just find this is fascinating, a great demonstration of the 4 stages of the market structure. I also have labeled on here a head and shoulders pattern. So we have a left shoulder, a head, and a right shoulder. Now, a concept in technical analysis is when you identify a head and shoulder pattern, you want to identify where the neckline is. And I'm going to draw my neckline like this with this yellow line here. And you want to calculate what they call as a measured move to get an indication of how low this price can go. So I'm going to draw a measured move from the top of the head down to the neckline. I'm going to right click on this, clone the trend line and drag it down here, and to get an idea where the price could go. Now, if you look at this, this is what they call a minimum move. That was down to like the $45, $46 range. And, we can actually see that level's been acting as resistance here. So that's what they call a measured move. You expect that to be the minimum price movement. Now, right now we're seeing, the stage 4 decline. The price has stopped declining at the moment, for the last 2 years. It's been moving sideways pattern, very similar to the stage 1 accumulation. Now, the question is are we going to see a stage 2 markup or lower prices and continuation of the stage 4 decline? Very key concepts to understand and be aware of. I use them every day in my analysis, and I think they're a good idea for you to learn them too and understand how to apply them to your investing and trading practice. My name is Trent Klarenbach. It's going to be a great day in Saskatoon. Life's good.